Hello, and thanks for tuning in to Finance Wise, the show that empowers you to make informed decisions about your money. I'm Dante Costume Milani, and in today's episode, we'll be discussing taxes. Many people often cringe at the mention of the word taxes, as it brings up thoughts of calculating your income and filling in forms to be rushed to the Revenue Office before the deadline imposed on you by the regulating authority. This is because a tax is a financial charge or other levy imposed on an individual or legal entity by the state. The fact that it is imposed on you means that it is something that you are required to do by law, whether you want to or not. However, understanding what taxes are and how they work and why they are necessary for the functioning of the economy may help you to realize that paying them may not be such an inconvenience after all. Today's episode on taxes is sponsored by the Financial Literacy Initiative. The Financial Literacy Initiative has its first anniversary on the 15th of March this year and was established to improve financial education and consumer protection. The FLI was rolled out in 10 different regions during 2012 and will be further rolled out this year. Now let's see what ordinary Namibians have to say about taxes.
What are taxes?
Taxes to me is what you get to pay on a monthly basis. Basically money that goes off from your certain account, or from your account rather, or from your payslip that we get to pay to government to develop our country.
Taxes is money that get deducted from employees' earnings, and as well as from companies, different companies that pay tax.
Taxes is the return or the money that the government imposes on every employees.
Can you name one type of tax that you know of?
Pay as you earn, because I pay that every day, yeah.
I know income tax. That's the only tax I know.
My friend, it's very difficult in the sense that most of us, we lack knowledge, we don't know. I once read in the newspaper, they were saying you must probably you get your salaries and you have livestock and you pay some money to those things of livestock, and you have to make a book, but we don't know those things. They are very difficult. It's very, very difficult. We lack information and training concerning taxes and personal booking.
What confuses you about taxes?
It's a lot of income and expenses to fall in on that papers. It makes me confused.
At this point is that how the money's been used. Yeah, that is confusing, and that how certain people are paid and certain are not paid out of taxes. That is confusing.
Taxes are mainly of two types, direct or indirect taxes. These can be defined as a financial burden on individuals or property for supporting functioning of the government. Taxes cannot be considered as voluntary payments or donations, but rather are enforced contributions which are extracted as per legislative authority government has. Government imposes this type of enforced contribution under different names such as toll, duty, custom, aid, excise, subsidy, or other similar names. The funds available through taxation are used by government and their departments to carry out many functions. These functions include expenditures on law and public order enforcement, such as the police force, development of economic infrastructure, social engineering, public works, and operations of government itself. Nowadays, most governments use taxes for funding public and welfare services such as pension for the elderly, public transportation, education, and healthcare systems. The next training clip focuses on the main purposes of taxes and the taxes applied in the Namibian economy. Government revenue in all countries is generated from a number of sources using various mechanisms. In Namibia, a major portion of government revenue is generated through taxation. Major tax sources in Namibia are taxes on international trade, mainly from Southern African Customs Union or SACU revenue, from taxes on income and profits, and from domestic taxes on goods and services, known as sales tax or value-added tax. Namibian residents, with some exceptions, are only taxed on their Namibian income at a rate of between 0 and 37%, depending on what tax bracket they fall into. Generally, the more income you make, the higher your tax rate as a percentage of your income. As from April 2013, anyone earning less than 50,000 Namibian dollars per year is not subject to income tax. There are certain tax exemptions on interest that persons other than companies can benefit from. These include interest on government stock or securities, including bonds, treasury bills, post office savings interest, and foreign interest. This means that you as a consumer are not charged any tax on the interest you earn from these financial products. Should you invest in the stock market, local and foreign dividends are exempt in the hands of Namibian residents. However, interest earned from unit trusts is subject to a final 10% withholding tax, except if payable to a Namibian entity normally exempt from tax, such as a pension fund, for example. A withholding tax, also known as a retention tax, is a government requirement for the payer of an item of income to withhold or deduct tax from the payment before paying it over to the beneficiary of that income and pay that tax over to the government. Namibian registered banks and unit trust companies must withhold 10% on interest that accrues to an individual. All businesses are eligible for taxation, whether they trade in a person's individual capacity, a CC, a company, or other legal entity. Businesses will usually register for income tax and value-added tax with the receiver of revenue. So what is done with the funds that the government collects through these various mechanisms? The taxation is used to raise money to spend on hospitals, schools, roads, and other indirect government functions like the justice system or good regulation. Taxation is also used for wealth redistribution purposes. Normally, it means transfer of wealth from richer sections of society to poorer sections. This function is uniformly accepted across most democracies, but the extent to which transfer of wealth should take place has remained an issue of debate in many countries. Taxes are imposed frequently to address antisocial behavior. For example, taxation is often applied on tobacco to discourage smoking and on alcoholic beverages to discourage the abuse of alcohol. These are often referred to as sin taxes, and some people advocate such policies as preventative measures. Namibia has a source-based system of taxation, with the result that Namibian residents are, with some exceptions, only taxed on their Namibian income, while foreign residents are taxed only on the income generated within Namibia. Now we talk to some of the institutions that deal with taxes in Namibia on a regular basis, to gain more clarity on the subject as relates to the Namibian context.
My name is Mr. Aldrin Manyando. I'm a public relations officer at the Ministry of Finance.
What are taxes?
I would define taxes as a compulsory financial charge that is levied by government upon taxpayers. And a taxpayer can be an individual, it can be a legal entity like companies and CCs, closed corporations, and taxes varies into two. For example, we have got direct and indirect taxes, and these are payable in the form of money. So this tax is not a voluntary thing. It is imposed by government. It is an obligation of each and every taxpayer to honor his or her tax obligation. So this is an enforced contribution that comes to the state revenue fund. All this money is pulled together into the state revenue fund, and it is payable from individuals.
What are some of the major taxes enforced in Namibia?
There are major taxes that are enforced in Namibia. One of them, the most common one, which is known to everybody, is the income tax for those that are working and they earn an income. And we also have value-added tax, that is for businesses. We also have transfer duties and also stamp duties. Let me start with the one which is commonly known to everybody, that is income tax. This type of tax is a direct tax that is imposed on the income received by an individual or an entity. Generally, the tax is imposed on the net profits from businesses, or we call them net gains or other income. Income tax is paid according to taxpayers' taxable income under the Income Tax Act number 24 of 1981 as amended. So anybody who earns an income, the current threshold is currently 40,000 per annum. So anybody who earns an income above 40,000 is liable to pay this income tax. And the Namibian income tax is called the progressive tax system, whereby we call it the pay as you earn. The more you earn, the more taxes is liable or is due to you. The second one is the one we call value-added tax. This one is an indirect tax levied on transactions. VAT, as it's commonly known, applies to transactions in which the then born end users through taxations of transactions into which they enter. The current VAT rate is set at 15%. That is the imposed under the VAT Act. This means that all taxable goods and services, it also applies not only to goods but also services, they are subject to the VAT at the rate of 15%. And then the third one is the transfer duty. This one is imposed under the Transfer Duty Act, and it consists of a charge for immovable properties. For example, if you buy a house, during the transaction of the transfer of, if the house is transferred to become your property, during the processing of those applications, you would normally pay the transfer duties. And then the other one is the stamp duties. It is also an indirect tax levied on various instruments, for example, written documents. Stamp duties is payable on lease agreements. For example, if you have to sign a lease agreement with a person who is renting from you, you will have to buy stamp duties, normally at the post office. So these are just some few examples of taxes that I can elaborate on.
Hello, my name is Johan Nel. I'm a Senior Manager in the Corporate Tax Department at PricewaterhouseCoopers.
What should people or individuals be aware of when it comes to filing their income taxes every year?
I think it's important to make sure that you're registered for the right type of tax, so that you're registered for income tax, and if required that you're registered for VAT as well. Furthermore, it's important to know about your filing deadlines, when these tax returns need to be submitted, and also be aware of the implications of non-compliance with these deadlines. And lastly, I think it's very important to be honest when doing your tax affairs, because if you're not honest, it can have some significant implications for you as a taxpayer.
What should small business owners be aware of when it comes to filing their taxes each year?
Small business owners can either operate as a sole trader or they can operate in the form of a CC or a company. If you operate as a CC or a company, it's important that you take into account the more stringent requirements. For example, you might need to have an accounting office or an auditor that signs off your financial statements. Very important as well for small business owners is to make sure that you save your money during the year so that you are able to pay your taxes at the end of the period. And lastly, I think it's important that you should take into account that you cannot deduct your private expenses for business purposes.
Why should people keep receipts of their expenditure during the year for income tax purposes?
In order for an expense to be deductible for tax purposes, you must have proof that that expense was actually incurred. So it's in your best interest if you have proof that you incurred that expense. So that's why it's important to keep all the invoices and the receipts that you have.
What are the penalties for non-payment of taxes?
If you are a provisional taxpayer and you forget to submit your return, there's a $100 per day penalty for every day that that return is outstanding. For late payment of your top-up, which is due with your annual income tax return, there's a penalty of 10% per month along with 20% interest per annum. If you omit or make an incorrect statement on your annual tax return, there is a possibility of levying up to 200% in penalties along with 20% interest per annum.
Where can individuals, companies, and small business owners get more information about taxes?
You can get that at any customer care desk or your inland revenue offices. Or if you want, you can log onto our website at www.pwc.com/na, and there's a link in there going to our Namibian tax rate card, which has got all the relevant information.
Now let's see how our resident investor Peter deals with his own tax issues step by step.
The Income Tax Act compels every person who is liable to taxation to furnish a return of income duly signed and including a computation of taxable income as well as the amount of tax payable. Currently, Inland Revenue provides 4 different forms for completion and submission by different taxpayers depending on the type of taxable income that the taxpayer earns in Namibia. The different forms to be used by everyone who's liable for taxation are the brown form, which is called the C form. This form is the shortest and it's used mainly by people who were employed by the same employer for a period of 12 months, in other words from the 1st of March to the 28th of February. And this form is for people who do not have deductions to make from income. The second form is the blue form and consists of 24 schedules. This form is entitled Self-Assessment Return of Income, Individual, Salaried Person, or Pensioners. This form is mainly for individuals who, amongst others, have not worked for the entire tax year for the same employer, who wish to claim expenses as a deduction against allowances, and were employed for part of the year of assessment only or earned income from other sources. The A form. This form is yellow in color and consists of 25 schedules. This form is for any taxpayer who derives income from farming activities.
Hi, Sandra. Yeah, it's Peter here. I got your details or a card from a friend of mine. Told me that you can give me advice on investment. Yeah. Yeah, no, yeah, he told me. But I was more thinking of tax advice in taxes, yeah. Yeah, I'm a registered taxpayer. I pay my tax. It's just that I want to like know because I don't want I have a lot of money that I saved up and I want to like invest the money, but I want the least tax implications. So I just want you to give me like options. What are the best options so I don't have to pay a lot of tax? Yeah. Yeah, I understand. Yeah. Okay. Yeah, if you can, yeah, you know, we can always meet up whenever you're free. Okay. Thank you very much, Sandra. Have a good day yourself. Bye. Hi, Sarah.
Hi, how are you doing?
I'm good, man. Thanks for making time for me, man.
Yes, no problem. How can I help you?
You can actually help me with tax, that's why I'm here. Sarah, I actually saved up about $100,000 and I would like to make an investment with the least tax implications. I don't want to pay a lot of tax on my investment. How do I go about this?
Well, sir, there are a number of investment options you would look at. If you would like to pay no tax on your investments, you could look into government stock or securities. An example of this will be government bonds and treasury bills. You need to invest in multiples of 10,000s, but the interest earned on your investments will not be subjected to tax. Although the interest rate is not very high, it is a very safe and stable investment option, especially for short-term purposes. We also have second options, which will be to consider investment in companies listed on the stock exchange. If you buy shares in your listed companies, you'll no need to pay tax on the dividends you receive from these companies. But remember, shares can be very volatile and their prices can fluctuate, which will expose you to the risk of losing some of your investments. It is best to invest over a long period of time when it comes to shares.
You know, that is actually also good, but I heard about this. Investing in unit trust. What do you think about that option?
A unit trust is a good consideration as an investment option. You will need to pay a final withholding tax of 10% on interest earned from unit trust investments. Therefore, a unit trust does not fit into the definition of tax-free investment options.
Okay, I sort of understand all the things that you told me now. But I think the best option for me is just to invest my money in government security. But thanks a lot anyway, Sarah. Hopefully I can call you up again when I don't understand this.
Now that we have some first-hand information about taxes, you can get started on submitting your income taxes for the year. Remember, there is no time like the present to start improving your financial prospects for your future. We have mentioned earlier that this episode is supported by the National Financial Literacy Initiative. The FLI has developed several street theaters which give tips on saving, budgeting, and spending in a very entertaining but still educating way. For additional information on the initiative, you can fetch one of these FLI booklets or posters at the Ministry of Finance in Windhoek or download the FLI booklet on the website below. Please remember that the points made in this program are not meant to give you personal advice. There is no one-size-fits-all approach to managing your finances. The point of this program is to give you a more tangible look at how a business person or individual might implement the ideas discussed. There are many other alternatives out there, and we strongly encourage you to explore them and see what works best for you. Whatever you do, keep the principles we've discussed in mind and never stop trying to learn more. This is Dantakostumi Malani encouraging you to get finance-wise. See you next time.